Hey guys, it is midday, 1:40 in the afternoon here on Wednesday. We're 3 hours, 2.5 hours away from NVIDIA reporting earnings, and yes, there is going to be an exclusive autograph signing event with me, myself, hashtag 6009.82. It'll be on April 18th at the Shangri-La in Makati, starting at 7 o'clock at night. Feel free, bring your own stuff, or you can buy some memorabilia there. Obviously, this is a fucking joke, but I felt the need to give a midday update because there were people that fucking couldn't figure out to do a trade after having covered everything extensively all day yesterday. So here you go. February 27th is tomorrow. If you wanted to go full blown, make it easy for me. Buy the 60-15 puts, sell the 60-20 puts. You want, as I posted there, $4 or $4.50 minimum credit. You do not want to do this trade for $3 because for $3, you could come down and do the trade for the February 27th 59.55 puts, 59.60 puts, and get $250, $3 credit right here, right now. Alternatively, you could also go and take on the February 27th QQQ 520 calls, currently trading right around $1.70. And with a big fat fucking disclaimer, how I am talking about the S&P getting down to 4,800, 4,400, 4,100, 3,500. What we're looking at here is simply a bounce. And at the moment, because of where you are red on the day. So I bring you up quickly what I spent an extensive 7 minutes going and updating. Here is our week-to-date chart. We are obviously looking at a second red week at present. We are currently looking at a red month at present. And this Fibonacci is now pushing on to the 61.8 retracement, and all of what I am saying is out of the window, completely fucking worthless if we break this 59.43.81. So, what I see here is a perfect ABC, missed it by a fraction of pennies as we went to 6,982. On this move to the downside, there is very little structure off of this intraday dip, but looking at it for the Fibonacci retracements, having broken the 50, so we can take that off. We are currently at the 61.8 retracement of this bounce, which with the 100-day moving average being there, with that 59.43.81 being there, this is the plausibility, probability that the algorithm uses this as support. At the same time, understanding you have 5 red closes in a row should you close down here below that 59.55 from yesterday. Right there. Right there. You're just red by 7 points. From a Fibonacci point of view, as well as just the FOMO alarm itself, plausibility of NVIDIA being the savior of everything, with tomorrow the actual new moon, February 27th, and we'd be looking at a bounce roughly up into that 60-40, 60-48 area. It may not come in one day. It may take 2 or 3 days to transpire. However, that is currently what this all looks like. And to bring up the QQQ chart, which I will get to in a second here. That's it. No, that's not it. That's the hourlies. That's on my other screen. Hang on. I apologize for the technical difficulties. Where are you? Here you are. Again, over there with the QQQ, I find it very difficult to see that we break above that 520. Very difficult. And we obviously failed. We failed right there. We're coming down again onto this big 511, 512 area. But with NVIDIA and the weight of NVIDIA and the plausibility, probability that NVIDIA is able to euphorically throw some magical dust in there. Let me get the 100s. 100 is there. The 200 is not there. So let me get my 200 on there. Up, way out of space. Forget about that. So again, with the probability, plausibility, we're right at the 100-day moving average over here as well, 512.30. The 50-day moving average up here at 523. You can very cleanly and clearly see this 520.21 area as resistance support over here on Monday, resistance all night long on Tuesday, resistance prior to the open on Tuesday, the big sell-off, and we've come back to it. So should you want to embark in an overnight trade that you do not need to go and waste any day trades on, what I could say or suggest to you is you've got your QQQ 520 calls. You've got the 59, 55, 59, 60 bullish put credit spread, $3, $2.50, $3. And you've got the, okay, give it to me. I'll risk 50 cents a contract for 450 possible, 60-15, 60-20 bullish put credit spread, which again, bring you back up onto the chart. That's 60-43, and we'll zoom out a little bit more. There's your 60-43, 65, where you failed right there at the very beginning of this week. It was an old level, that 60-45, 60. So looking for it to possibly, plausibly get itself back up there. Yeah, it stands. And bring on my Thanksgiving chart, and here you go. 60, 37, 61. That was your plus 1% move off the other day, which I can remove now, and I can remove here because those are your tariff talks. But that's where you're at. So if you want it, it's there. If you don't want it, by all means, don't feel that you have to be required to trade. The Apple puts trade is up $3 fucking.